on a mission to help lawyers and law firm owners maximize wealth and achieve financial independence. Welcome to the Lawyer Millionaire with Darren Wurz from Wurz Financial Services. In this podcast, we will help you build wealth, minimize your taxes, and plan for retirement with money management strategies designed for the legal profession. Join us in this journey where we help you manage your money so you can make the most of your future. Start feeling confident in knowing you are well prepared for retirement and on track to financial independence. Now on to the show.
Inflation may not be a sexy topic, but it impacts more than you may think, including investments. Well, Darren Wurz tackles inflation today with a guest, his brother Travis. He's also in the family business of financial planning with a focus on realtors. Travis, tell us a bit more about your education and what you do.
Yeah, my name's Travis Wurz. I went to University of Toledo and work up here in not really our main office, but I guess we did start in Toledo, so I can claim that. I ended up working with a lot of real estate agents, just the real estate industry. I work with a lot of lenders and title people as well, but mostly also a lot of self-employed people. So it's something I specialize in is planning for specifically self-employed people, how to set up retirement, accessible investments, and just overall planning when you're self-employed and the struggles that can cause. As well as just people in general, people planning for retirement, young people looking to buy a house and save for retirement and those kind of things.
But Darren, you said today we're going to talk about inflation, right? So everybody's talking about it. Prices are going up just about everywhere. But tell us exactly, what is inflation?
Yeah, what is it? We're seeing it everywhere, right? On the headlines, it's like it's all over the news. We're seeing it in political advertisements now as we're getting close to midterm season and all that. It seems to be the major topic, right? What is this all about? Well, in its most basic sense, inflation is simply the phenomenon of prices going up everywhere. And I think a lot of us are seeing that in various things. You know, whether you're buying a car or buying a house, you're probably seeing it there. You're probably seeing it at the grocery store, you know, and I've certainly noticed my grocery bill has gone up recently. Patrice, I don't know if you've had any of those experiences.
Oh, goodness gracious. Oh, don't even go there. Yes.
You know, and it's funny because like my car, I drive a Camry and it doesn't cost very much to fill up, but you know, it used to be $30. Now it's $50, you know? So yeah, we're seeing this everywhere. It's the price of everything seems to be going up. We're seeing it especially in some really focused areas like used cars and things like that. Mm-hmm. You know, it's this phenomenon. And Travis, you've had some education in economics and business. Tell us what causes all this? What is this all about?
Yeah, well, you know, I think the technical definition is the rate at which our prices in goods and services rise. But no, you drive a Camry, so you try having a truck. I used to drive a Mustang, but I sold it for a Jeep. I thought maybe, you know, you get better gas mileage, but it actually get worse. So it really stinks. You talk about like gas is just crazy. Would you say what is causing it? I think you can't really pinpoint it on one thing. It's just like so many things are all coming together that can be causing it. Like recently, China is going into another lockdown, and like that's not going to help our already continuing supply issues that we're having, which is I think like when we came out of COVID, or not came out of it, but like the initial lockdown, I think that the demand rebounded very quickly. But there wasn't the supply chain to support that. I think that caused a lot of problems. Obviously, this war with Russia and Ukraine, you know, being big oil exporters, is causing. We talk about gas, so I did also hear this thing like people are expecting to make more money. You know, like I want to make more. I should be making more. That you know everything costs more money. And I don't know if you've ever heard of like a wage price spiral. I was reading about that, where people want, you know, are demanding to make more money because everything costs more. But then if they're paying people more, then the costs of goods go up, and it ends up creating like this spiral until like inflation comes down. I was just reading about that the other day.
Yeah, I think we're seeing some of that. Don't they call that, or aren't they terming that the Great Resignation? There's so many people are looking for workers. They're willing to pay a premium, and people are switching jobs, looking for other opportunities where they can earn more. So yeah, I think we are seeing a lot of that. Now, you mentioned something interesting about selling your Mustang and buying your Jeep, and there was a weird thing that happened when you sold your Mustang.
Oh yeah, it was crazy
because of inflation. Tell us about that.
Yeah, this wasn't even recently. I mean, it was recently. It was a year ago, almost exactly. But I was put this car for sale, and you look it up on Kelley Blue Book. Or that's what I do. When I put something for sale, and I just put it with the very highest price that it could possibly be that I never thought I would get, because it had an accident reported and had 100,000 miles. And I think I was like, right before I went to bed, I just posted it for like 24,000 or something. And, it has 100,000. I'm like, there's no way. And then in the morning I had a message from a dealership, and they said, hey, the price is fine. We'll drive to you. We have cash. I'm like, this doesn't even seem legitimate, but they did. They came to me. They were driving another car that they had just bought. And just because I said, we don't have any used cars. Like we don't even need to make money on them, or that we just need things to sell. It's just crazy.
And so they're willing to pay a premium. Yeah. And then we had another recent experience. I totaled the family car, which was great. We won't get into all of that, of course, but mom and dad went to buy a new van, and the price that the insurance company paid was more than the original cost of the van, just because of inflation and because of what.
And they've had it for like only 3 years or so, not that long.
Yeah. So it is really, really crazy. And it is crazy. I mean, the levels that we're seeing now are levels that haven't been seen since the 1980s. CPI is one way that economists measure inflation. It's the Consumer Price Index. Basically, you have a basket of different goods and services, and they track how they change. And then there are adjustments for seasonality and things like that. But the CPI annual rate last it was put out was, I think, 8.5%, which is insane. So from last year to this year, average price of things has gone up 8.5%.
It's crazy.
So it is. It's pretty strange. And Travis, in stuff that you've studied, is this something that's kind of new, or have we seen this before at some point?
Well, obviously some part of inflation is normal, and it's normal to have inflation. And I think there's a group of people that argue that the point of inflation is to combat deflation. So it is normal. But like you said, it hasn't been this high since, in the 1970s and early 80s when things were this high. So it's normal to an extent. It's not normal, to see 8 spikes like we have. I think everybody's talking about it because when it is normal, like 2%, 3%, that's kind of how it's been the last 10 years. You don't really feel it as much, because a lot of jobs will give you like a little 2% bump every year or whatever. So you don't feel things getting more expensive. But like everything coming together right now, like gas prices, we didn't talk about houses, but that's another thing. Like we were looking for a house, and there's two sides of that too, because we'll probably get into this, but interest rates. So I know what a lot of people are thinking is, okay, I might pay more money for a house right now, but it might be okay because if interest rates go to like 7%, but I'm at 4 and I pay more, like maybe my overall cost is the same. Yeah. So I think that's also what's in people's, because I was told that advice by our real estate agent. They're like, well, if rates are going to go up, it might be okay to pay a little bit more. And I think that's causing people to pay even more for, accelerating this whole thing.
Sure. And people are expecting those rates to go up. And so they're trying to get in, right? I want to get my house now while I can, So now I want to talk about our clients, So, are you hearing clients talk about this? What's the big concern here? And when your discussions with people, what are you hearing people say?
People mostly just, they hear on the news inflation this and inflation that. And I think people are mostly just worried, like, is this going to affect me? Should we be worried? A lot of our clients don't understand everything that goes on. So they want to know, like, is inflation going to affect me? Should we move our money to something else? It's one of the biggest struggles of retirement planning is inflation. So, when people hear about things spiking, they get super concerned.
That's a really big one. So when we do our retirement planning, we use a program called MoneyGuide Pro for those who are listening. And it's a great program because one of the really cool things is we can build in an inflation rate on different things, that we're planning for. And usually we, put a higher rate of inflation on certain things like healthcare, because your costs are going to grow throughout retirement. And we talked about this in the last podcast episode on retirement planning for attorneys. We talked about the need to think about inflation seriously. And, for a long time, that really hasn't been something that's big on people's minds. But if inflation is as high as it is right now, and it stays that way, that's going to be a really big thing for retirement planning. And people are really going to need to adjust their retirement plans. Because here's the thing, if you make 10%, let's say you average 10% a year in the stock market, if inflation is 3%, you're getting a real yield of 7 or something, close to it. But if inflation is 8%, you're only actually making truly maybe about 2% on your money. And that's just not going to be enough for a lot of retirement plans. A lot of retirement plans are going to need to be revised to accommodate those potentially higher rates of inflation. Now, the other thing that I'm noticing is clients are concerned about their portfolio. What does inflation mean for stocks? Can you give us some clues there, Travis?
Yeah, sure. Well, like you said, last time we saw this was in the late 70s, early 80s. And, what did the stock market do then? It seemed like there was a lot of volatility when things initially came up, but everything did pretty well. I don't know exactly, but I know it was more than 10%. There was like 15% year, 20% or so a year. So the stock market does not correlate with inflation, but it is a good hedge to inflation. One of the things I want to go back to is you asked me about my clients. We talk a lot about retired people. I don't know about you, but we were also talking about houses. I have a lot of young clients that are the same way. They're like, should I wait? Is everything going to come back to normal? So that's another thing. People are, like, should I buy a house if I'm only going to live there for, maybe this is our first home and we might only be there for 5 years. So then you get into the conversation about renting. But I don't know if you've looked at how much it costs to rent, which expensive. Is astronomical as well. Yeah. So there's really there's no escape. It's pervasive, which is really the frustrating and difficult thing. And you're totally right. In the 70s, there was a bear market for a little while. It didn't last forever. So that's the thing. There may be some volatility here, and really the volatility is going to be caused by how the Fed deals with inflation. And their biggest tool, well, they've got two tools: interest rates, which they've already started raising. And the other thing is reducing their balance sheet. And a lot of people don't understand the balance sheet, but basically the way the Fed helped to support and prop up the stock market during COVID was to go out in the marketplace and buy treasuries and mortgage-backed securities. That provided liquidity very quickly, very easily to the marketplace. But their balance sheet expanded to astronomical levels. I mean, they did this in 2008 during the financial crisis, and everybody was concerned then. But what we've seen over the last couple of years in the expansion of the Fed's balance sheet,
makes that seem like small potatoes. I think they expanded their balance sheet by like $7 trillion worth of treasuries. And that, economics 101, right? You create the money supply. To that extent, you're going to have inflation. It's all about the money supply. So now they're in a position where they're going to start maybe shrinking that balance sheet. The last time they did this was in 2018. And if you recall, in 2018, at the very end, Travis,
that was fun.
What happened? Tell us what happened.
Yeah, everything seemed to tank. But they had a nice Santa Claus rally, but it wasn't a good time.
Yeah, it was very stressful.
It was ugly. Yeah.
Now, I think the Fed really has an interest in trying to keep the markets going, so if volatility gets too bad, they're going to back off, but I think it would be right to expect some volatility, maybe not as bad as 2018. Maybe things could be a little bit less volatile, but I think that's going to be an expectation. But one thing you mentioned, and it's very good, is that stocks generally do keep pace with inflation. One of the better asset classes for keeping pace with inflation. You don't want to put your money in a treasury bond yielding 2.5% if inflation is 8%. That's going to be really hard, especially if rates are rising, because rates going up means the value of bonds goes down. And so that's going to be really tough.
Right. And one of the reasons for, why stocks correlate like that sometimes is as they increase their prices, it's a way for investors or people that are buying stocks and mutual funds that to participate in that rise in prices.
Definitely. Now, Travis, do you get questions? I know I get questions. Clients want to buy certain things. They want to buy commodities or they want to buy gold.
It seems like gold is the one.
Okay. So should we?
We laugh about this. I have clients. Probably every week I'll have at least somebody that calls me and say, "I think we should put everything in gold." It's typically the same 5 clients, but yeah, I see gold. We were talking about this. It's like I think there's like 4 things. Okay, if you can Google it, like what should I buy to hedge inflation, and you'll get gold and commodities and real estate or real estate investment trusts. It's just a tough question because talk about like hedge inflation. Does that mean just like if inflation's high, we want something that's like maybe inflation is 8%. So we want something that's going to be up around 8. Maybe next year inflation's 2. So like, do we want something that also does that? Yeah. And I guess I talk about historically gold has kept pace with inflation, but it really hasn't. If you look back, like there have been times where inflation has been high. Yeah. Actually, I think in the 80s, but gold had losses. So
it's not a perfect correlation. And the problem is for investors, we don't need to just keep pace with inflation. We need to outpace inflation.
There you go.
That. Now, these clients may be right. Maybe a year from now we might look back and say, "Darn, we should have put everything in gold."
About gold bricks.
But there's no real way of knowing that. It really, you want to stay. It might be smart to have some of these things in your portfolio. Our strategies right now do have some exposure to gold, commodities, real estate, and things like that. But you want to make sure you're diversified. And really, the more important thing is to make sure that you have a strategy.
Yeah, there you go.
A really good rules-based strategy, and that's what we can provide, obviously. But there's one very interesting thing that we've been thinking about, and that is, what about money in the bank? Because, if I have all the financial planners recommend that you have 3 to 6 months of savings in a bank account, but the banks aren't paying anything. So if I have, 30 grand in a checking account, inflation is 8%. I'm basically losing 8% a year. That's not fun. So, but we have a potential solution for this, don't we?
We do, yeah. So this is kind of something that I coined off personally. I was just had this money sitting in my bank to pay taxes, emergency fund, and this is really something I didn't coin it. I lied. It came from our dad, Richard, who brought us in the business. But he's always he would use high yield bonds, so that was like his bank strategy. Okay. Now that wasn't probably the best place to do that because it correlated with the stock market a lot. But, we had this, or I guess I had this similar thinking where maybe there's something better that I can do with this money that's in the bank that is set aside for, emergencies or taxes or just reserves, right? So, Darren, you help put together, we call it a cash management strategy, which is mostly designed, people talk about risk and aggressive, and sometimes they're not the same thing because the objective of the strategy is low risk. How can we have low risk, right? But it has performed relatively decent over a long period of time, right?
Yeah. So we designed that to have the least amount of possible drawdown. It's not a very aggressive strategy, but historically it's done fairly well, at least better than, just a static bank account. Now, it's not without volatility. It still can have some volatility. That's the thing you have to be aware of. So this is a kind of strategy to use with those funds that you don't expect to use. So emergency funds would be a good thing for it. But, people, I do get asked this question, should I invest my emergency funds? Because people do have this concern about losing money, because of inflation in their emergency reserves. But this strategy, it's a tactical strategy. So it changes. It's designed to change with the stock market and with things.
You have to be smart with it. You use it, right? So it's not as if you just take your emergency fund and put it all in, a growth fund, and then the stock market plummets, and then you need this money and it's not there. So it's super important to have some sort of risk managed strategy. But the biggest thing, this is what was amazing. I didn't know you could have a checkbook linked to an investment account, and maybe it's this is a thing I just didn't know about it, but I found out a couple of years ago, and that really, obviously you can transfer it to your bank in a day but it just made it feel more accessible. Yeah. But one thing that I find that a lot of people don't realize is that you can have an investment account that is accessible. I think people have this thought that when you this money's in my bank, right? And because I can touch it, it's in my bank and I can see it, and they feel that when you do something with it, it's just more not there. It's somewhere else, and it's locked away or something.
You have a great term for it. I think you call it the
brokerage checking account.
There it is, the brokerage checking account.
Yes, it is a brokerage account with a checkbook checking capabilities. This is what I use for my write my taxes, and when tax time comes around, write my quarterly checks out of it, and I use it for emergencies and stuff.
Yeah, a lot of self-employed people have to pay quarterly taxes. So I have clients, a lot of attorneys are in that boat, and so they use the cash management strategy exactly for that. Now, again, it doesn't make money all the time. It does have some volatility to it, but it's better for them. They're willing to take that level of risk to hopefully do a little bit better over time. So
I want to make one comment, what we were talking about before, which was, what can you buy or what can you invest in to combat inflation? And I think that the whole conversation is thought about maybe in the wrong way. And the only reason I say that is, okay, inflation's at 8% this year. Have you had any clients call you, Darren, that said, hey, I need to raise my monthly income by 8% because inflation's at 8%? Has anybody told you that?
No, not that I can think of.
No, me neither. Right. So, it's not that if inflation's at, 2% or 8%, that really your income or that needs to change that much. And we did talk about this, but what's more important is that over a period of time that your consistently making more than inflation.
Yeah.
It could be if you're young and just saving money, or if you're retired and, creating an income for yourself.
Sure.
So anyway.
Great thoughts. Well, thanks, Travis, for joining us today. This has been a great discussion on inflation. And, hopefully things start to cool down, but we'll see what happens. Patrice, I'm going to hand it back over to you.
Well, I'm going to come right back at you and say, Darren, how can listeners reach you?
Absolutely. Yeah. So if this is a concern for you, you want someone to talk with, you can definitely reach out to us. The best way is just to go to the website. That's wurzfinancialservices.com. And at the bottom of the page, you just scroll down, you can find a link to my calendar, to Travis's calendar, and you can set up a phone call or a meeting of any kind.
All right, then. This is the Lawyer Millionaire podcast. Follow, share, and get the book of the same name. Darren, it should be out pretty soon, right?
That's right. Coming out hopefully sometime around the end of June. So don't have a definite date yet, but it's coming.
All right. That is the Lawyer Millionaire. I'm Patrice Sikora, and let's talk again later.
Thank you for listening to The Lawyer Millionaire. Click the follow button below to be notified when new episodes become available. This content has been made available for informational and educational purposes only. This content is not intended to represent investing or tax advice. Always seek the advice of a qualified investment or tax advisor with any questions you may have regarding your own financial circumstances.